Now you're probably reading the title of this video and thinking, what on earth? Surely I want to get out of the market if it's about to crash. But today I'm going to share with you why that could be one of the worst decisions that you could make as an investor. Let's get into it. How's it going, guys? Ryan here and welcome back to another investing video, and today we are talking about why you should not exit the market during a crash. And this applies to all sorts of investments, whether you're talking about stocks and crypto, which my channel is focused on, or whether you're talking about real estate or other types of investments. It could be one of the worst decisions that you make in your investing career. And in today's video, we're going to explain exactly why that's the case. But before we get into all that good stuff, please remember to leave a thumbs up if you do enjoy today's video. And if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. We cover stocks, crypto, investing, and wealth management in general. And of course, I'd love to know your thoughts down in the comment section of today's video. But without any further ado, let's jump straight into today's video. I want to kick today's video off with something that one of the greatest investors of our time, Warren Buffett, has spoken about. And he speaks about the concept of time in the market, not timing the market. And basically what this means is, if you're willing to invest money into the market long term, it does not matter what point you invest, you will make your money back within a period of time. So the whole idea of market crashes really revolves around this concept. Whilst yes, markets do crash, they also always recover. And this doesn't really matter what you're talking about. When we're talking about stocks, we've always seen consistent growth over time. Crypto, the exact same thing, consistent growth over time. Even if we look at other markets such as real estate, there is consistent growth continually through these assets that you are purchasing. What you're looking at here is the S&P 500, or the Standard & Poor's 500 index. And basically what this index does is it takes the top 500 companies and puts them onto an index. And as you can see, zooming out, this over time, looking at the bottom of the screen here, consistently increases. Yes, we have our dips, but it consistently increases. You can see right about here is when COVID hit and we took a very large dip compared to what we typically see. But as I continually zoom out, what you'll notice is a trend, and that trend is consistent growth. It doesn't matter when there are dips in the market, when the stock market crashes like we saw here, there is always a period of recovery. Here's another great example right here. This is the 2008 financial crisis. What happened? Well, as you can clearly see, it went down for a number of years, but if you were a long-term investor in the stock market, it still recovered. Let's go and just, I suppose, take a better look at this from a monthly perspective, just to, I suppose, make it a bit more clear, and we can go back into the past a bit more as well. You can see the 2000 crash, the dot-com bubble, bang, we went down once again for a number of years, but we recovered. And yes, whilst it still dipped past that point of the GFC, we recovered once again. And as I zoom out, you can see back in history, it is consistent growth that we are seeing, whether it be small, whether it be large. There is consistent growth if you do not sell those stocks. In a similar fashion, let's take a look at a completely different market, the crypto market. And in this case, we are looking at Bitcoin, which is effectively a great base for us to view the fluctuations of the overall crypto market, as this is the leading cryptocurrency. And as you can see, as we zoom out, a similar sort of pattern occurs. Yes, we have dips. Yes, we have crashes, but consistently what you can see is there is growth over extended periods of time. Let's go to that monthly chart as we did previously. Zoom in a bit so we can see exactly what's going on. Yes, we had big dips, but then we saw recoveries similar. Once again, we had a big dip here, but we are seeing a recovery occur. And whilst this is obviously only since 2015, 2016, and it's a relatively young market that we're viewing here, the same concept applies. These natural fluctuations in the market are nothing to be scared of if you are a long-term investor. And with everything that's going on at the moment with Evergrande from a stock perspective versus China banning crypto once again from a cryptocurrency perspective, I really wanted to address this fear-mongering when it comes to investing. If you are a long-term investor, you should be focusing on one key thing, and that is the company or the cryptocurrency or whatever asset it is that you are invested in. Can it withstand a market crash? If the answer is yes, then you do not need to worry about the stock market crashing, the crypto market crashing, or whatever market that you're in crashing, because that asset will continue to operate, continue to grow, and continue to provide you returns over a long period of time, even after the crash does occur. Whilst yes, we may experience an amount of pain, overall we are still in a great position after the fact. There are effectively two key issues that you're going to experience if you are the type of person who does sell these assets. The first of which is the obvious tax implications. When you sell something, especially for a profit, you are obviously going to owe tax, and obviously as well, you might be selling it for a loss and unfortunately taking a hit to your overall capital, to your overall net worth. Secondly, you can't predict the market. It could bounce back tomorrow for all you know. That's why you've got to focus on investing in the right companies, the right cryptocurrencies, in order to get your best bang for buck and your overall return. If you're a swing trader or just a day trader in general, you're not looking long term. So this really does not apply to you. This is for those people who are invested long term in any type of asset. You need to not panic, not take on the trader's mindset of minimizing your risk or exposure by being within the market during a period of a crash, because you have a long-term perspective. You are looking at returns over 5 to 10 years, not 5 to 10 days or 5 to 10 weeks. Overall, you really need to just make sure you sit back and take into account the reasons you're invested in a company, or the reasons you're invested in a cryptocurrency, or whatever asset it is. A fantastic example would be with an asset that is not as liquid, such as real estate. If you thought the housing market was going to turn and you've got many rental properties, that does not mean you're going to panic and sell all those rental properties. Those rental properties eventually will start to appreciate once the the overall cycle for the real estate market turns back on again in 7 years' time, or whatever the period of time may be. But during that period, those assets are still obviously generating you income as well. Perfect example as well, we can compare this to a dividend company, a blue chip company that pays these out. Whilst yes, the overall value may dip for a period of time, you are still making money from that asset in the form of whether it be dividends, or potentially some stocks and some cryptos do continue to appreciate during these market crashes or these market dips. This then takes us back to that Warren Buffett quote about time in the market, not timing the market. You do not have the ability to time the market perfectly. The best bet you have of having success in the market is by being in it, and being in it for an extended period of time. So make sure you don't listen to all this fear mongering that's going on, unless obviously you're a trader and you're trying to get in and out of things. There is a big risk in that sort of sense. But as a long-term investor, just make sure that you are investing in assets that you truly believe in, whether it be stocks, whether it be crypto, whether it be real estate. Invest in those assets which are going to generate you returns over a longer period of time. And what you'll find is many investors have said that the returns that they would have had by just purely holding onto a stock or crypto or whatever it is for an extended period of time far outweigh the small gains or medium gains that they have made over a period of 1 to 2 years instead of 10 to 20 years. That wraps up today's video, guys. I hope you did enjoy it. I know I haven't done one of these in quite a while, so I felt it was time we got back into the roots of this channel and started talking investments in general. Make sure you let me know your thoughts down in the comments section of today's video. I'd love to hear it, and of course if you did enjoy, make sure you hit the thumbs up, and if you want to see more of it, hit subscribe and turn on those bell notifications. We cover crypto, stocks, investing and wealth management. But I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.